From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for November 9th, 2016. Today, I want to take an overview really of each of the U.S. currency pairs and take a look at what has happened since the election. Of course, we had quite a bit of volatility and market movement throughout the election process and during the results of the election, and we want to really take a look at what's happened and what we might expect to happen over the next couple of days. I think we could still see some unrest and still see some uneasiness in the market, but at least at the current moment, they have pretty much returned to pre-election levels and the trading zones after the election has come to a little bit of a calm state right now. Let's take a look here at the USD CHF, the dollar franc first. Of course, we've been studying this long-term range for quite a long time on the dollar franc. That's the big black box that's here on the chart. Let's go ahead and zoom it in a couple of times so we can really see what happened over the result of the election. Of course, we saw the move all the way down here into the 95.50 level and then a dramatic return right back to pre-election levels back into the 97.70s. Of course, this stands to question, are we going to just return to what we were doing prior to the election? And I think we could. I think there's definitely a possibility that as the market was moving up, going into the early parts of the week, the same thing still happens. We look for the breakout above the green zone for a potential continuation of the uptrend, and as long as it stays underneath this green zone, we could be looking for it to bounce and go back down. So it's still the same thought process methodology that we were looking at yesterday, except we have that big spike lower from the election results. So nothing really has changed here. 97.80, 9800 is the resistance. So if it breaks above it with any dramatic fashion, we'll look for the market to go up. As long as it stays underneath it, there's potential resistance. We definitely want to be cautious trading U.S. currency pairs today, but I think nothing really has changed here for this currency pair. We go back to somewhat normalcy. Let's take it down to the 4-hour time frame, and you can see, of course, there's the big spike lower and return, and this is where we were yesterday. Nothing really has changed. I do think as long as it's under the green zone, if you are going to take a trade on any of the U.S. currency pairs, or especially here on the dollar franc, you would be looking to short the dollar at this point underneath that green shaded area, and the potential for it to go back down is there. And if it breaks above it, that's the risk, and then you would look for it to continue higher for the dollar franc today. Taking a look at the euro dollar, similar situation. Of course, we have been studying different levels and different ranges. Let's just go ahead and zoom it in a couple of times here on the daily. Over the past couple of days, we've seen and traded the green shaded area as resistance, made money as it went down. We were looking for the yellow zone to hold as resistance yesterday. It did. It went down to the blue zone. Then, of course, there's the election result, the big spike all the way into the 113 level, and then turned right back around and came right back down to the pre-election support level, the 1.1015, 1.0985 zone, the blue shaded area. So it's a similar situation. If you're looking to go dollar short, this is the place to do it, right here, right around the 1.1 level, dollar short into that level. If you're looking to go dollar long and looking for the dollar to continue to strengthen through the day, I think your next motivator will be the breakout underneath the 1.0985. It needs to break that support. Even yesterday prior to election, and even if you go back here a couple of weeks ago, there was a lot of support there into that blue zone. So if you're going to go short, it needs to break the blue zone. If you're going long, this blue zone becomes the opportunity you're looking for today. Selling the yellow or maybe selling the green zone on any rally may be something to watch for as we go through the day today as well. One last look at the 4-hour time frame. So again, it's pretty much status quo. Pre-election, we were between the yellow and the blue zone, and the same thing is happening today. Post-election, we are now back between the yellow and the blue zone for the day today, looking for trading opportunities, but being very cautious. Let's take it over here to the GBP. Again, pre-election, we were stuck in this yellow zone. Let's go ahead and zoom it in. We were stuck in this yellow zone pre-election. We had the election jump all the way up here into the mid 125s at the green shaded area. It's come right back down. The status yesterday as we left the trade room was we looked for a break below the yellow zone or above the yellow zone with an open and close outside of there to give us higher confidence, and it hasn't done that yet. So again, it's back to pre-election thoughts. We're looking for the breakout of this yellow zone on the pound dollar. Let's take it over here to the USD CAD. In a similar fashion, we were looking at this black box at the top right hand side. The market was stuck inside this black box for the past 10-11 days, and nothing really has changed. We're still stuck. Even though we've seen spikes below and spikes above, we're still stuck in that black box. Take a look. Blue zone at the top, 134 to 134.25. The orange zone, 133.55, 133.30. We went below it yesterday. The market turned right back around, went above it, turned right back around, and here we are back to pre-market or pre-election status here on the U.S. CAD. Let's take it down to the 4-hour time frame. Here on the 4-hour time frame, we do see a little bit of a difference where we do see actually a push and a breakout above the 34.20, 34.25 level, which we didn't do back here. So that could be very interesting for us, the fact that we're today sitting on top of there. So if that's the case, if it stays on top of here, then this could be our long opportunity, taking it all the way back up towards at least the yellow zone at the top of the chart. And of course, the risk here today is that the market pulls back underneath the 134. Of course, then we know where our support is, all the way back down here at the orange zone. So at least at the current moment, the US CAD looks a little bit long rather than short on the US CAD. Let's take a look at the USD JPY, the US dollar versus the Japanese yen. Of course, similar situation, but now I think we have this range that we're looking at. And I'm going to actually take this black box right here. I'm going to pull it right to about right here, and let's widen it out like this. So I think we're in this range or congestion zone here. We're finding resistance at the blue zone, support at the green zone, which we have actually been buying the green zone for the past couple of weeks, but we're finding support at the green zone, resistance at the blue zone. At this point, of course, we did get the election spike below it, but it's still within that similar and familiar area here for the US yen. So I think we need to look for one of two things. If you're looking to go long, clearly the green zone still becomes our opportunity. And we've traded that over the past couple of weeks. So the green zone down into 103.20 is still our support. Today we are still sitting just underneath this orange shaded area, and we've seen resistance and support and congestion about there before. That's right around 104, but we're underneath it. That could give you a little bit of a bias to the short side as long as it's underneath that orange zone. And of course, we know that the blue zone is resistance. And at some point in time, looking at this box, this range, at some point in time, I think the trend returns when we break below the green zone or above the blue zone. That's still pretty much what we were speaking about yesterday. That's when we look for the return of a trend. And we might even see it bounce around in here a little while longer as there's so much uncertainty in the market. But look at the past few weeks. I mean, we're going back to the beginning of October, really, that it's been inside that black box. So we need a breakout if we're going to look for a trend move for the US yen. Taking it over here to the AUDUSD, similar situations. I thought it was very interesting yesterday evening. If you were just solely watching US dollar based currency pairs, some US dollar based currency pairs were selling off US dollar. Some US currency pairs were going long dollar. And this Australian dollar is no different. It made a US dollar strength move. It spiked lower. That's actually US dollar long on the spike lower. All the way back down into the 7600, 7590s, into the pink shade area. And by the way, touching once again back here towards the black trend line, the 100 period moving average. We've circled that times when it's done that over the past couple of weeks, and it did it once again even on the spike lower yesterday. But we're right back in the same area that we were trading over the past couple of days. Take it down here to the 4-hour time frame. Look at this. The green shaded area, the blue shaded area, we've been studying that as resistance. We did make a push higher, and it turned right back around, went all the way back down here into the low point, and here we are right back in the middle. So it is interesting. Let's take it back out to the daily, and you can see these black trend lines I've put here on the chart. The black trend lines represent somewhat of a triangle pattern that has been developing here for this currency pair. If we bring it out here like this, you can see somewhat of a triangle pattern developing here for the Aussie dollar. If that plays out, we're looking for a breakout at some point, either above it or below it, to give us a clear direction. At least right now, we continue to consolidate and contract within that triangle pattern here for the Australian dollar. NZDUSD, of course, today we do have a little bit of a caveat here on this currency pair as we have New Zealand interest rate news coming up later today. That could be, of course, a game changer for this currency pair. But at least at the current moment, we see the spike all the way up into the pretty close to 7,400, back into the 7,390 or so level. Spiked all the way up there into the blue zone, came back into the pink zone, the same area we've been studying as resistance for the past couple of weeks. Here's an interesting way to look at this currency pair too as well. Let's actually take this little trend line like this, and let me make that thicker so we can really get a handle on this. Let's go into the properties, make it thicker. I'm actually going to make it a different color as well because we already have a black trend line. So let's make it blue. So take a look at this blue trend line here. And if you're looking for reversal clues, never reversal indicators, we often look at patterns like head and shoulders patterns. Well, look along there. Where the blue and the red circle are at the middle of that trend line, we looked at a shorter term head and shoulders. But now look at this, where we see the left red circle as resistance. And now, over the past day or so, we now find resistance along that blue trend line again. So could that be our clue, an indication that of more of a long-term turnaround for this currency pair? We'll have to wait and see. But it is interesting there, and we'll look at that later in the live trade room. 4-hour time frame, there's our election jitteriness there, where it pushed all the way to the blue zone towards 74, turned back around, came back in to the same area. Remember, yesterday we were studying this area in the black box. Well, we could take that black box out again and say, hey, guess what? We're still in there. We're still inside the black box. So resistance is pretty clear. The pink shaded area. A break of that, we look for it to go higher, which it already did once. Support is down here at the orange shaded area, of course, and if it breaks underneath it, we look for the currency pair to go short. I think that could be an interesting point of interest here between the pink and the orange zone. Again, you think about head and shoulders pattern. We've now created the left shoulder, the head. Now we just need to create the right shoulder, and this becomes a short-term head and shoulders pattern as well. That is clearly a potential reversal pattern. Interest rate news today out of New Zealand could change this as well. So you just need to keep an eye on this. And all U.S. currency pairs today, I don't think you're ready to jump the gun yet and call it dollar long or dollar short, but just be cautious and use appropriate risk strategies in all your trades you take today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.